The UK buy-to-let market at the moment is going from strength to strength. You could say it was strong the day after the Royal Bank of Scotland was saved by the government, but not many people could see it for what it was at that point. But every day since then, the buy-to-let market has been strengthening. We've seen the inability to get mortgages driving more people into rental. That in turn has driven up rents. Prices have risen a little over the last year. Rents have risen as well. So we're seeing still consistent yields in the 8% zone or so nationwide as an average. But we think that over the next year, particularly with the budget announcements of the 95% mortgage products that the government is backing, I think the time has finally come for a more material movement in house prices. We're not big on house price growth. We don't major on that type of speculation. We're more bothered about income. However, income is going to be under some pressure, I think, over the next year or two. As a result of these new mortgages coming into the market for home buyers, we're going to see prices rising, and I don't think rents are going to be able to keep up. So the conditions at the moment are probably about as good as they're going to be in the foreseeable future. You can't go back in time. Today is the chance. Prices are going to rise faster than rents. Yield percentages are going to come down over the next year or two. So people looking to build a foundation, a bedrock of sound income producing investments should get their skates on, in my view. Let's have a look at what happens this year, but 5% plus growth this year. And investor pricing in particular is under a lot of upward pressure. So I think we're going to see yields nationwide fall from our average sourced level of about 8% down to perhaps 7% in 2014. Around 30% of our investors are landlords and manage their own properties, but the rest are busy with their day job. You know, the reason they've got cash to invest is often because they run businesses, they've got highly paid jobs, they might be consultants, but they're busy people. Time poor, cash rich. And our role is particularly aligned with that type of investor. We've majored over the years in new build, which with today's valuation view is pushed down to typically around resale house price values, but without all the repair hassles. And that certainly suits well an investor looking for hands-off investment, perhaps not even in their own local area. In addition, our new asset managed solution for resales provides an investor with the chance to buy a resale property, rented perhaps already, but with a repair schedule to lift its value, perhaps look at getting equity out later in years to come as a result of that uplift in value. And our asset management partner even looks at using the rental income to pay for those repairs out of cash flow. So it makes it a very sound economic structure with an aligned asset manager looking to drive up rents through tactical use of some refurbishment in order that their income stream goes up, and yours, and your capital value. So most of what we do is about driving up the value for hands-off investors and helping them achieve good growing rental incomes. I think there isn't one size fits all with our investors. People are looking for different things. The majority, to be fair, are looking for very long-term income to be financially independent or to retire on later. But that doesn't mean the portfolio mix is the same for everybody, because different time frames demand different things, and people already own certain properties often as well. So we put together a portfolio that might include student accommodation, new build, hands-off city centre units at high yield, or perhaps resale houses refurbished with an exit in 5 or 10 years to a home buyer. It's a mix approach, and it's not random, and it's not necessarily down to what somebody thinks they want. We recommend people, encourage them to use our portfolio software system to consider where they are at the moment, consider where they're going and what they're trying to achieve, plug in their existing properties if any, and then plug in the different types of properties we have with our help to build an outcome which perhaps has you retired on a £50,000 income in 10 years' time. That's what we do. I think in this marketplace, some vendors are very switched on, and some people know an awful lot. The balance of power in a marketplace is a very important thing to address. Education is at the heart of that, and a community. People telling people what they're experiencing, what they're seeing is vital. So a community, a network and education is vital to keep you in a powerful position versus vendors trying to sell you their property and trying to express that theirs is the best in the market. You need to measure best, you need something to measure it against, and that's where a community, that's where education comes in. You need data to assess what you're being sold.